Friday did peg us back. Firstly, the Infosys numbers, and then in anticipation of what Reliance is going to deliver on Friday evening, which it did fall short of expectations, that stock as well cracked down pretty hard. Having said that, FIIs continue to pour in money, and as of year to date, it's already a quantum of about $1.2 billion. But yes, Infi, Reliance, that really pegged us back and dragged us quite a fair bit. This morning, there's nothing really much to talk about in terms of global cues. It's pretty sedate and quiet, but I guess our markets have lots to digest. And 20,000 seems a little further away.
Yeah, you've just gone there and you just retraced, and then the flow and the sequence of the event is such that right now the trigger is missing. And I think that is my sense as well. The surprise from the earnings season is missing. On the upside, is certainly not there. On the downside, few companies have disappointed. So the earnings season so far is off to an okay start. And when markets are sitting at 20,000, you don't need an okay start. You need a great start. And since that earnings upgrade cycle has not started, you got to ask yourself is that what is the trigger? 50% of the earnings season so far is over, and barring one or two upgrades here or there is nothing in the system which can really generate a lot of upside momentum. The other question is that we got hit because of Infosys. The Reliance, large part of the price discovery that is behind us. Numbers were just about in line. So now the only wheel which in a sense will have to do all the heavy lifting would be banks. So it's Reliance and Infosys on one side, banks on the other side. Can banks really do all heavy lifting? And I think if the fundamental push in the market is missing and if earning upgrade is missing, the market, there are two pillars if you're batting for the bulls. One are banks and second are flows. So can flows continue to drive the market higher, and can banks really keep on taking the entire market momentum higher in terms of a sector? I think that's the easy setup to understand.
Yeah, absolutely.
Yeah, and Nikunj, since you're talking about earnings, that clearly seems to be the big talking point. And you had clearly 21.5% of the overall Nifty weightage that came out with their numbers from Friday till the end of the weekend. RIL, Kotak Bank, HDFC Bank, ICICI Bank and IndusInd Bank. And if we were to just sum it all up, like you said, it's nothing that inspires any confidence. RIL, the O2C business as well, didn't quite deliver. It was a bit disappointing when it came to HDFC Bank. So the heavyweights haven't really passed the muster.
Let's spend a minute trying to understand Reliance. Now, for a Reliance shareholder who's a genuine long-term shareholder, they should be saying thank you, Mr. Ambani, because that 260 rupees of price discovery is something which was unexpected.
The bonus, like you said.
It's like a bonus. It's like a free share you've got, and that's almost 8-9% of the current market underlying stock price. So that comes in. Now you got to ask the core business. Now that the price discovery happened, the combined value of Reliance after the price discovery, the stock went to an all-time high. For the better part of this year, the stock has been a sleepy stock. Now that price adjustment is over. Those free shares will hit your demat account and they will start trading somewhere in August. But independently, if you look at the core business of Reliance, GRM, Geo, retail, chemical, stroke refining, there was nothing large which will warrant an upgrade. You may argue back and say that the trend in second half will be better than the first half because GRMs are improving, but none of the brokerages have come out with something which could be called as a big loud upgrade or a price target change. Now for a stock where such a large event in terms of price discovery is already over, it may really not be the motor stock, it may not be the engine stock. So last week, if you frankly ask me, Reliance was the engine stock which really took the markets higher. That zinc post numbers would be missing. So Reliance at best may stagnate, and that push for Nifty to go higher, which was coming from Reliance, will not be there. That's my limited point.
Yeah, the question is who's going to do the trick for the Nifty then, if at all we make an attempt back to that 20,000 mark. A lot of bank numbers as well to digest. Look at the commentary coming in from HDFC Bank, for instance. They're saying that they're looking at competitively priced deposits, lower credit costs, which they think is going to offset higher OPEX. Kotak Bank is saying that the leadership transition is on track and no stress in their unsecured book. ICICI Bank, they're saying that NIMs will moderate at a cost of deposits rise. The cost of funds will continue to rise, however. And IndusInd Bank says that the cost of deposits is going to peak in the second quarter. The FY24 guidance is credit cost guidance, that is about 1.1, 1.3 odd percent or so. And I think that's the question, right, Nikunj? It can't be Reliance. It won't be Reliance today for sure. Can banks really do the trick?
Aisha, just look at the four numbers which you spoke about. And we are looking at an average 20% growth, 15% plus growth. 15% plus growth on that kind of a balance sheet size, I think is super duper. NIMs are strong, PAT is strong. Even though banks are in heavyweight sector, I think they will be in the driving seat. And I think they would continue to get lion amount of market share and lion amount of flows also. So nothing wrong with the banking numbers. The banking sector per se, I think the trend is clearly visible, which is that if you look at the large versus small banking comparison, large banks is where the large amount of market share, large amount of profitability, large amount of balance sheet scale up, I think is clearly visible. So large versus first banking, good set of numbers. Will they warrant a major upgrade? No. Will they just cement the optimism? Yes. Within banks, it is mid cap versus large cap. Large caps are the ones where the puck clearly seems to be moving. And within the large cap, now this is the important one. If I look at the first four set of numbers which have come out, HDFC Bank, Kotak Mahindra Bank, ICICI Bank and IndusInd Bank, in my book, the standout number I think is ICICI Bank. Of the comparison, if you do.
Yeah, the only thing is that did the market not price that in? I mean, ICICI Bank is already sitting at highs. So is the good already baked into the price or not? And how much will the market reward ICICI Bank stock after looking at these numbers?
So Aisha, the consensus view, and there's a difference in consensus view and consensus pricing. I'll try and explain it. Consensus view is that banks will do well. Consensus pricing is that when markets are factoring in all kind of growth rate and these price to books are reaching levels which we've not seen before with this kind of a growth rate. So I don't think these banks have reached what could be called as really Humpty Dumpty level in terms of valuations. B, the growth is so strong that in a sense will continue to give them this kind of a commanding premium. See, the subsidiaries are filing full cylinders. The argument in the banking space now is that will they be market performer or will they be market outperformer? I think they will be market outperformer. And within banking, you got an area of bank. You start from SBI and you go all the way down to Yes Bank. And you can see that how Yes Bank numbers were not great, but HDFC Bank numbers were great. RBL, AU is struggling, but ICICI Bank is no problem. So the puck, I think, is now clearly with large cap banks. And mid-cap banks are not really, even though their balance sheets are small, they are struggling.